So ASML released earnings today, and it did not go well, particularly for the company. 16% down. All right, so you would assume they're really terrible then, right? Well, they aren't great, but they aren't necessarily utterly terrible either. Let's take a peek at them. ASML cuts forecast for quarter three, kind of cut. It's not necessarily true to entirely say that, right? Because we expect our 2025 total net sales growth to be between 30 and 35 billion euros, which is the lower half of the range. So actually, it's completely within the range they guided. They originally guided between 30 and 40. Analysts had on that upper end, they said it's going to be between 30 and 35. Crushed, right? Chip market weakness is expected. So they're expecting other semiconductors to do good, but not AI. Company said despite a boom in AI-related chips, so AI chips are doing fine, other parts of the semiconductor market are weaker for longer than expected. So basically, AI is doing good, non-AI is doing not good. So, and that's leading to the lower side of the 30. But even then, 30 to 35 billion euros is about for the, obviously we don't have all the earnings in for the rest of this year, but from projections, it's a 7 to 17% increase in revenue year over year, and they're expecting the same profit margin. So is this bad? Well, it is bad for one area. It is bad if you are like, oh yeah, this thing's just going to shoot up to 1,000, 1,100, 1,200, 1,500. Yeah, if you think it's just going to shoot up over the course of the year and that's why you're holding this or short term, yeah, this is not looking good. However, if you're a long-term holder in this company, you really shouldn't be worried, at least not with this earnings. It's literally within the guided projection that they set. They're expecting between 30 and 40 billion, which is actually an insanely high range. I don't know why they do that unless they're really uncertain. And clearly they were, right? But even if it hit 30, it would be a revenue increase. And also, one thing to keep in mind, if we look at analysts or analysis, whatever, analysts are in the analysis. They beat these last three quarters, or except for this one, excluding this quarter, they've beat on earnings per share 6 of the last 7 quarters. So about 75% of the time. If you include this one, it would be what? 6 of the last 8. Yeah, so 3 quarters they hit, 1 they missed. That's consistently right. So if you're taking that, you can probably guess somewhere at least in the middle of that range. It's probably not going to be 30 billion, right? We don't know. But just the reaction to it, 16%, right? That's crazy. One thing is certain for me after this earnings, right? And it's that if one of these stocks, these AI stocks, NVIDIA, an AMD, a TSM, an AMAT, whatever it may be, ASML, right? If they really miss, right? Like this was literally within the guidance, right? This is within what the company said they were likely going to do, right? They didn't lie. Imagine if they said, yeah, we're going to probably have somewhere between 26 billion and 29 billion. It'd be down 30% with the way this reacted, right? It'd have to be. So, yeah, no, if you're in this stock for a long-term hold for, oh, this is going to shoot right back up, your money, this may run sideways or down for a substantial amount of time, truly. But if you're in it long-term, I wouldn't be worried for one reason. At least the reason I bought this company, not because I think it's undervalued. Actually, it's fairly overvalued. Fairly overvalued. I say that with quotations. This company is going to demand a premium because they have such an important part in the supply chain for AI chips. It's just so in all semiconductor chips, but specifically AI chips, right? No one can, at least today, and probably for the next at least 3 to 4 years, probably much longer, but even if you're looking at it from like the most pessimistic view, everything moves through them. TSM, Intel, Samsung cannot use their foundries without ASML. They can try and look in other areas, but no one else does it, and certainly not the quality ASML does. So the reason I'm investing in ASML is not necessarily because I think they're super cheap, but I think long-term earnings are going to go up because no one has a choice except to use them. So if AI is a real thing, which I think it's going to do fine, maybe it's not going to quadruple the entire market in a year or two. I don't think that. But long-term, this company is going to be fine. And I would like to point to an example of TSM. Let's take a look at it real quick. I bought TSM in 2021, early 2021. About 120 per share. So not in the 140s, but the 120s, lower 120s. And I held it. I think about it right about there. I held it. And I was down up until now. And now I'm just cooking. I mean, I'm up substantially. I bought more in the 100s and all that too. But it took forever to get up on that. But now I am, and I've done great on it. ASML, kind of looking like it's going to be that same thing. I do not know where the share price will be, but if in 5 years this company isn't earning more, well, I guarantee if it's not earning more, the PE is going to be a lot lower, right? That's if they're not growing. But a company growing between 7 and 17%, I'm not concerned. I'm not super concerned. If you're a short-term holder, I would be panicking. I'd probably sell because I don't think this is going to shoot up. Maybe they beat earnings, but take their word for it, right? I would. I wouldn't expect much higher, but long term, I like this company. I like this company long term. I think it's going to be fine. Cooler heads will prevail. This may be a stock you're down on, especially if you bought around here for maybe years. And if you're not okay with it, sell. But I think you may regret it. I'm not going to say like I know the future. And it's easy for me to say, right? I own this stock. Actually, I just bought very, very recently. But I'm not super concerned because, one, it's a small percentage of my portfolio, only about 3 or 4%. So I'm not like panicking, like, oh, it's my retirement money, right? But also, I think it's going to be fine. I really do. And even if it isn't, I mean, we're going to have to see a lot more disasters for them before I really think that, right? So they're going to have to. This is still basically within what they guided. Yeah, they had a bad quarter in terms of earnings per share, but the guidance is all we really care about, right? And the overreaction to the guidance is sure, like literally it's within their expecting. But anyways, that's all I have for today. I'm going to wrap up this video, and I'll catch all you guys later. If you made it this far, I'd appreciate if you left a like, subscribe, whatever it may be. And I'll catch you next time.